Good morning, everyone. Thanks very much for joining to listen to the Fenix story. We are an iron ore miner in the prolific Midwest region of Western Australia. And this picture tells a lot of our story, 1,000 words, let's say. So this is our Iron Ridge iron ore mine. In the distance, you can see the 3-to-1 strip ratio mine that we're mining. In the middle of the picture is our ROM pad and crushing and screening plant and our product stockpiles. And in the foreground is one of our fleet of quad road trains where we haul that iron ore 500 kilometres to the port of Geraldton. This is a mine that we built in 2020. We spent $15 million building and commissioning the mine, and we've since generated $1 billion of revenue out of this mine. We've paid $65 million back to our shareholders in dividends. We've got about $60 million in the bank at the moment, and we've used a couple of $100 million to reinvest in the business and expand production. So I'll get into it. It's a great picture. This presentation's on our website. We look like a mining company, and we're here amongst a mining investment forum. We actually have 3 pillars. We're a miner, we also do logistics, and we're particularly good at road haulage, and that's a completely separate part of our business. And then we have a port business. And bulk commodities are all about actually the logistics. And so, in fact, the simplest and of those 3, the smallest cost component of our production is actually mining. The largest is logistics, port, and then shipping costs. And so, therefore, where we make all our money is actually as a logistics company. And we see huge scope to expand our logistics component as well as our mining component. Let me show you a bit about our operations. This is our Shine iron ore mine. This is the second mine that we've commissioned in the Midwest. We're currently mining 1.2 million tonnes per annum. Here it's a 60% ore body. We have 15 million tonnes in resources. This is a mine that we acquired on care and maintenance from Mount Gibson, and we've recommissioned it with an investment of $7 million in capital. So again, it's another example of how we can use a very small amount of capital to generate very quick returns. This mine is the sort of what I would call a simple quarrying operation that we do very well. 1 digger, 4 or 5 trucks. We have a contractor on site doing the crushing and screening, and we produce a lump product and a fines product. And we then are responsible ourselves for hauling that product to our own port facilities. The Shine iron ore mine, it's a lovely place to mine, as you can see, a nice open flat area. This is the Iron Ridge mine. This is the mine I was showing you on our cover slide. This is the highest grade iron ore body in mainland Australia. It's 65%. We produce a 64% lump product and a 63% fines product. Very simple operations again. And there's our super quad road train being loaded in the foreground. We're about to commission our 3rd iron ore mine in the region where we mine in the Midwest, and that mine is at W11. This is 20 kilometres away from Iron Ridge. You can see the iron ore body sticking out of the ground as a nice ridge. The first 1 million tonnes of this mine will be a 1-to-1 strip ratio, so we're directly into the ore body. It's 20 kilometres from Iron Ridge, and this week we are commencing the construction of a private haul road that will connect this mine to our existing infrastructure, which you can see now on the screen. This is one of our quad road trains. The total weight of these are 200 tonnes. They have a 150 tonne payload. Very high technology business. We're actually achieving costs per tonne kilometre of haulage that are actually akin to rail costs, and we're doing that on public roads. We operate our own workshop and a wellness centre, a training centre for our drivers. We have the world's first driver simulator unit you just saw, allows us to train and upskill our staff. And we have our own facilities at the Port of Geraldton. We can store almost 500,000 tonnes of iron ore and then load that onto boats that takes that product to our customers. So the quad road trains, this is shed 5. We also have a truck unloader that can efficiently load that material into the sheds. And we ship out of Geraldton in Panamax boats, 60,000 dry weight tonnes means we pay a little bit more in shipping, particularly to China, but it also allows us to access a range of regional customers and Chinese customers whose steel mills are located near ports that can actually access 60,000 dry weight ton boats, and it prevents the need to double handle the material at the other end of its transit. So that was a quick snapshot, 3-minute video of our mining business, our haulage transport logistics business, and our port business. And this is the region in which we operate, and a snapshot of our assets. The Iron Ridge mine that you've seen is at the top of the screen. You can see in the blue line the 500 kilometres of road network that we're hauling that. The W11 mine that we're about to build is just 20 kilometres away, and soon there'll be a blue line connecting that as we complete that haul road. Shine, where we're mining 1.2 million tonnes, is to the south. Our market cap currently is $200 million Australian. If you're looking for a compelling business case based on structural fundamentals, I'll just run through some of the assets that we own and operate. Outside of our mining business, we have a haulage fleet which currently consists of $150 million of prime movers and trailer sets. In Geraldton, we own a 40-hectare depot with the training centre, refuelling centre, driver workshop, wellness centre. We're building a 70-house subdivision development in Geraldton that we own to house our new employees. We've created 300 jobs in Geraldton. We own 2 rail sidings that cost about $30 million each to build. Our port facilities are insured for $200 million. We own those. We own the truck unloader, we own the conveyor belts and the sheds that are on wharf storage. And all of that fits within our $200 million market cap on our listed equities today, 60 of which is cash. This last year we made $75 million EBITDA and a net profit of about 35 million Australian dollars, and that was based on 1.5 million tonnes of production. Since then we've commissioned the Shine iron ore mine, and in 2 months we will be operating the W11 mine. That will take our annual production from 1.5 million tonnes to 4 million tonnes. At the current iron ore price, we've effectively tripled our production rate, and we're maintaining our C1 cash costs around 75 Australian dollars FOB Geraldton. At the current iron ore price, that means that we're generating a cash flow margin of about $50 Australian for every tonne of iron ore that we mine, haul and ship. And so very soon at 4 million tonnes, that means that we could, with iron ore prices where they currently are, be generating $200 million of operational cash flow, which is about the same as our market cap. So if you're here as an investor, we're here to meet you. We've got a booth. We'd love to talk to you. And if you'd like to participate and join me in buying shares on market at Fenix, I own 20 million of them, and it's not nearly enough, then we'd love to have you on board. Come and have a talk about our port services, the sheds that we own at Geraldton, the infrastructure assets I've described. We run really simple mines. We're very good at it. We, in a period of double-digit inflation, if you look at our last 4 quarters, we've maintained our costs below 80 Australian dollars, and we continue to do that and see further opportunity to create margin. We're a company that's very, very focused on owning our assets. We provide third-party logistics for other customers. We're diversifying our revenue base, but our number one driver is to profit from mining in the region in which we operate. And we're securing those opportunities because we have port access and we have a haulage network. We are successfully increasing our iron ore production. We're self-funding. We have no senior debt. We're very conservative in the way we run the business, and we're expanding our business rapidly. We're looking for new growth opportunities. We have a live takeover bid for a company called CZR Limited. It has 40 million tonnes of iron ore, and that company needs a miner, it needs a transport road haulage company, and it needs a port. And that's why we're making a takeover bid for it. We've traded sideways. There's a lot of bearishness on the ASX in iron ore, and I don't think the market has yet understood what happens when we triple our production to 4 million tonnes and maintain. So those numbers in EBITDA and net profit, you can see there are last year's numbers. Since then, we have tripled our production. we are going to start to demand a significant re-rate in our share price, and we'd love to share in that success with you. Look forward to conferences. Wish everyone the greatest success at the conference, and thanks very much for listening.